Right, 6 years, we're on to our last topic hopefully. I don't think I'm going to do any of the rest. I think we've enough done for you to ace this paper. The last one we're going to do is cash flow statements. I know I always say this is a nice topic. I've actually kept the nicest till the end, okay, which is good. You're going to find this one of the easier topics. The only problem with this, it follows an FRS, Financial Reporting Standard. Now, if it follows one of those, it's like the published accounts, it has to be written correctly. There's no shorthand allowed in it, okay? So rather than do theory and an introduction, as I'm doing bits, I'm going to add in little bits of theory all the time. Okay, so you're going to take this down in different parts, but I'm just going to explain it to you first. So it's cash flow statement, CFS if you want. The cash flow, we're on about, what we're trying to look at here is during a period of time, usually 1 year, did more cash come in or out of the business. So we're looking at cash flowing in and out. Now, if you look at these three items here, these three things will appear in your profit and loss account, okay? We will put depreciation in your profit and loss account. We will put in either a profit or loss of a fixed asset. Actually, rather than put a plus sign, I might just put that there. A profit and loss of a fixed asset. And we'll put in if there's an increase or decrease in the bad debt provision. But those three things affect our net profit, but they don't actually affect the movement of cash. So if I'm looking to figure out my cash flow from my net profit or operating profit figure, I have to remove these three from the operating profit figure because they actually didn't involve the movement of cash. Not like advertising definitely had to pay for it, rent had to pay for it, wages had to pay for it. But the three of these, you didn't pay for these, they were just an expense of the business. So we have to remove these when we're doing a cash flow, a reconciliation. So one of the first things that we're going to do, and there is a part, there's an A, B, C and D to this question. I'm actually starting at part B first, and you'll understand afterwards. We add in part A later. So the first thing that you're going to have to do is, you're going to have to look at your operating profit. Now, when you do your trading profit and loss account, you get your operating profit and it shows how much profit you made. But I just said, we include these three things in our operating profit and they don't affect cash. So the first thing is I want to fix that. I want to get rid of those from the operating profit so I can look at my cash flow. So we're going to reconcile the operating profit to look at the net cash inflow from our operating activities. Okay, so the first thing, we will normally have these items here, and the last thing is in the exam for this part A or B, you're going to write either you have a net cash inflow or outflow from your operating activities. Okay, now the first thing that you're going to put in there, I'm going to do question 1 with you, and I'm doing question 1 on page 431. Now your operating profit is taken straight from the book, okay, so that's going to be given to you as 22,300. Believe it or not, you're going to get 2 marks for writing that in. The next thing I want you to do is I want you to do a working, okay? Now working 1, I want you to look at 3 things. I want you to look at your stock, your debtors and your creditors. And you're going to look at 2 years. We have the years 2008 and 2009. I want you to write down their opening figure, their closing figure, and tell me how did they change. Now let's look at our stock. What's the years again? 2008 and 2008. Okay, in 2008, stock was 128,000. In 2009, it went up to 145,000. So your stock went up. The only way the stock can go up is if you bought more. So that meant the stock went up by 17,000, which means you're spending 17,000. Everyone okay with that? So that means that you're spending 17,000. So over here, I'd have an increase in stock, and I'll put down that cash went down 17,000. Then I do the same with my debtors. Now remember, debtors are people who owe me money, and I would like to have that money. So the debtors at the start were 32, at the end was 60,400. So you've sold quite a bit here. But instead of selling that for cash and having your money now, you have someone else holding on to that and you need that money. So your debtors are after increasing by 28,400. So that's your money tied up. So an increase in your debtors is a bad thing for your cash as well. Okay. The next thing is we look at our creditors. Now creditors are people we owe money to. and we love having as long as we can before we have to give out our money to pay them back. So your creditors were 27, now there's 32,000. So you have their money tied up. So you have got another 5,000 euro that you owe to creditors, which means you still have that money, so that's good. So an increase in creditors is a plus for you. Now that's probably the hardest thing that you're going to have to do, is work out whether you're taking away or improving your cash. Okay, working number 2, I want you to do, this is very like the workings that I do with you for your fixed assets, okay? I want you to write down what the figure was at the start, did you purchase or dispose of any, and what the figure is at the end. Now we have 2 types of fixed assets. We have land and buildings and we have equipment. So I've put in the figures at the start and I've put in the figures at the end. To get these 2 pieces of information here, we need to look at the adjustments. So if you turn to page 432, it says there was no disposals of buildings during the year. So we did not dispose, okay? But it did say that we purchased. So I'm going to put these in a different colour. So we went from 426 to 580. I'll just put these correctly for you. So we spent 154,000 on a building, okay? And then my depreciation went from 33,000 to 42,000. So that was an increase in depreciation of 9,000. All right, I'll show you how to use these figures in a minute. Let's look at our equipment, and the adjustment says there was no purchases of equipment. So we did not purchase any equipment. And it said, sorry, I'm going to leave that there for the depreciation charge for the year. And it said equipment was disposed of. We did sell equipment for 21,000. Now, that's what you got for the equipment, okay? So just write it into your textbook. Equipment was disposed of for 21,000. Just write in your textbook. That's how much cash you received. So my equipment went from 300,000 to 270. So I must have got rid of equipment that had cost me 30,000. Okay. Then my equipment, the one that I got rid of, it says in adjustment D, the depreciation charge for the year on equipment was 20,000. So the charge for the year was 20. Okay, so that means there should be 50 here, but there's 45, which means there was 5,000 for the vehicle that I sold. Okay, just go back on that again. Right, you have 30,000 here. They said 20,000 is depreciation for this year. So the 2 of these add up to 50, but you've only 45 there. So there must have been 5,000 euro depreciation on the disposal. Okay, so that's step 2. Okay, now from step 2, I need a depreciation figure for this year. So the depreciation figure for this year was 9,000 and 20,000 there. So the depreciation figure was 29,000. And I'm adding that back in. Because remember, I included that in my profit and loss and I took it away as an expense. But we said that doesn't affect my cash, so I want to add it back in. Okay, looking over here, the cost of the machine or the equipment that you sold was 30. The accumulated depreciation was 5. So you believed it was worth 25,000. Now going back to the question, it said you disposed of it for 20. So that means that you were not happy and you made a loss of 4,000. And I want to undo this here. Now you have to, I put both words in there originally. I'm going to change this and write it out properly. Loss on disposal. Remember, you have to do it properly, of equipment. And I want to undo the loss, so I'm adding it back in, 4,000. And that there is not in this question. I just put the bad debt provision in. I'll do that with you in another question when it's in it. So at this stage, all you have to do is tidy it up. So you have 22,300 plus 29,000 plus 4 minus 17 minus 28,4. Oh, should have to do that one. You could just take the answer down there from your solutions. But that's actually how you do the first part in the exam.